So this time, I'm gonna focus on the zoom in on the short-term picture. Kasi dati parang masyadong long-term yung iniisip natin eh. And we recently got access again to our Bloomberg unit, so I have lots of stuff for you guys. Okay. First off, okay, so I showed this a while ago with the sketch. So this is article actually from an article a few weeks ago pa, but I think it's still relevant. Okay. So what's saying is that okay, ang daming bad news na lumalabas, 22 million jobs, 22 million people in the US lost their job. Percent GDP decline in the next quarter. But if you look at the US market, ayaw nang bumaba. Okay? So what this guy's saying, David Rosenberg, follow him in Twitter, guys, sobrang galing nito, is that we have to respect what the market is signaling to us. Okay? So what the market is signaling, okay, lahat ng bad news ito, alam ko na to. Okay, so what's next? What's next? Okay, so the market is looking forward today, diba? So what could that be? Okay, so first, yeah, the coronavirus cases just reached 2.4 million. So it's still growing fast, but I think people are anticipating that the peak is gonna come soon. Okay, and if you look at the major countries na tinamahan dito, this is daily confirmed cases. They are actually flattening out. Okay, so ibig sabihin, kahapon 10,000 cases, today 10,000 pa rin, maybe tomorrow 9,000 cases, daily new cases. So what that means is that the rate of growth is slowing down. So maybe dati 5% today, ngayon bila 4 na lang. Okay, so the daily confirmed cases are going down. So this is the first sign that you are flattening the curve. Okay. Okay, so this is daily confirmed cases. This is daily confirmed deaths. Okay. So ito medyo mas malinaw, right? Like if you look at Europe, it's already flattening out. So US hindi pa, but let's see. Okay, so I think that today the market is anticipating that it will start flattening out maybe in the next few weeks. Okay. Sorry. Okay, so if you look at the recent news, I think the leaders like Trump, Angela Merkel in Europe, they are talking about opening up the economy. Okay, so this is Trump opening up America again. So may nag-protest anti-lockdown. Okay. This is in Germany. So they are announcing their plan to slowly exit the lockdown situation. Although if you read the fine print, all mass gatherings are still not allowed until August 31. Tagal. Okay, but they're slowly planning to open up. Okay, so if you look at the stock market naman, what's in the price? Okay, so we got this from Bloomberg. So if you look at this, if you look at this is a yearly estimate. This is for this year. So this is the estimated EPS for the US. It's 135. Okay, so it's down 10% year on year. So this is what's being priced into the market. Okay, so at the beginning of the year, this estimate was at 175. So people were estimating before 15% growth. Now it's minus 10% growth. Okay, so this is a downward revision of 25%. Okay, so for comparison, actually, no 2008-2009 crisis, the EPS went down 40%. Okay, so marami na rin na price in as of today. So right side, if you look at the Philippines, the EPS estimate for this year is 455. Okay, at the start of the year, this was at 510. Okay, so from 14% growth, the market's already pricing in just 1% growth. Okay, so it's also a big revision down. For comparison, 2008, the EPS declined by 30%. So I would say estimates have still have room to go down. Okay, although ang laki na ng binaba ng market, so that means that the PE is very low right now. So it's just 12 times versus the 16 times average. Okay, So, okay, what's next? Okay, so I think that, okay, you're seeing the start of the curve flattening with the daily new cases coming down. So maybe we're near the peak already. And so I think that if you look at this chart, with the daily new cases starting to go down, I think we're close to the peak already. So if I'm correct, I think we're close to the peak. So the question is now, can we keep that curve going down? Diba? Or are we going to open up too early and risk another spike in infections? Okay. So like if, for example, if you look at Singapore, diba, they've been very successful in flattening the curve, diba, and controlling the cases, but look at what happened in the past 2 weeks, diba? So things got a bit out of control, and you see a spike in cases in Singapore. Okay, so I think that this is going to be a continuing battle going forward. Okay, so next, so ang lakas ng rally ng market, no? So I think that, especially if you look at the US, this is no coincidence. If you look at what the Fed has been doing, is that this is like money heist. By season 1, the printing press is running 24/7. So I think that's what the Fed is doing right now. So if you look at this left chart, this is the increase in the Fed total balance sheet in the past month. It increased 25%. Diba? So yung balance sheet ng Fed from 3.7 trillion to 6 just in the past month. Diba? So increase in balance sheet 25%, stock market increase by close to the same amount. Diba? So it's no coincidence. Diba? So it's not just money printing. So they expanded the asset purchase program. So before they were only purchasing treasury bonds, but ngayon pati corporate bonds, investment grade bonds, high yield bonds, commercial mortgage bonds, municipal bonds. So I think yung next stocks na yung bibili nila. Okay. So my side comment ko lang dito is that if you look at where the stimulus is going, it's obviously going to the stock market. It's going to the bond market. Diba? So all those benefiting from here are just, of course, the top 1%. Diba? So I think the Fed is going back to its old playbook now. Okay, let's save the stock market. Then let's hope that the benefit is trickled down to the masses. Diba? But obviously, that didn't work in the past 10 years, and I don't think it's working again today. Diba? So BSP also cut rates. I think they cut the reserve ratio also this year by 200 basis points also. So I think that, especially in the situation today, monetary policy has limits. So I think what's crucial now is that the fiscal response is also there. The government is planning 1.2 trillion in fiscal stimulus. That's around 5% of GDP. Okay, so the reason why I say that is that banks are afraid to lend. People are afraid to borrow, or they have no capacity to borrow. So how much can rate cuts help, diba, in this situation? And for example, nakasarado lahat. Diba? So economic activity has stopped. Diba? So in that situation, mas konti yung effect ng monetary policy. So it has to be fiscal now. Okay. Okay, so going to the market. So I grabbed this chart from Bloomberg. Diba? So I think that the rally is now 30% from the bottom. So as of Friday, the market closed at 2874. So that's a gitna na tayo. I think we're right here around lampas konti ng 50-day. So it's obvious, I think it's close to resistance already. So you should expect some volatility going forward. Okay. But the MACD is still in rally mode. So hindi siya nakalagay dito. But if you look at the MACD, it's still wide open. So that means we're still in rally mode. Okay. So if you look at the breadth of the market, so this is something new that I pulled up today. Okay. So in March, look at this. I think over half of the market was making 52-week lows. Diba? So ngayon, nawala na yun. Diba? So the good news, wala nang 52-week lows. Bad news, wala din 52-week high. Diba? And if you look at the market, only 22% of the market is above the 200-day moving average. Okay, so that means that 8 out of 10 stocks are below the 200-day. Okay, so medyo bigat yan. Okay, so saan napupunta yung pera? So if you look at where the money is flowing, so I think it's obvious, right? So it's going to the FANG tech stocks, right? So actually, they're still up this year. So this normalized at the start of the year. So meaning all your Google, Amazon, Netflix, and you must stay at home stocks, diba? Like yung sinabi ni Leonard last week, all the money is going to the tech stocks. So if you look at the rest of the market, naiiwan sila. Diba? So this is the SPX, down 14% for the year. Small caps and financials down 30% for the year. Diba? Right side, emerging markets yung naiiwan. So this is emerging markets, down 18% for the year. Philippines down 26% for the year. US just down 11% for the year. Okay, so oil. So if you guys been following, oil is down 18% today. Okay, so it's down 75% year to date, and this is actually bigger than the 2008. So I guess it just shows you the state of the global economy. So right side, so I've been writing about this a lot. I think the dollar is very important. So right now it's stabilizing, but it looks like it's just consolidating for another move. So I think for emerging markets, this is what you have to watch. Okay, and I think this is also the major reason why emerging markets are underperforming. I say if you look at the dollar swap lines, emerging markets are not included. Okay, so the swap lines is mostly for the developed markets. So hindi kasama sa emerging markets. Philippines, yeah, we're also right here at the 50-day. So expect some resistance kasi ang dami na umandar din. Okay, the market breadth, believe it or not, in March, 100% of the index made the 52-week close. 100%. Okay, right now, yes, the market's rallied, but only 10% of stocks are above 200-day. So I think alam natin yan, mga PLDT, Pure Gold, Globe. Diba? So in fact, I was able to get this data. So if you look at this is the rally of the market in the past month. Okay, diba? So they're mostly nasa big caps yung rally. But ito yung maganda. Look at the year to date. Diba? Sino lang yung up dito? Tatlo. Diba? So that's your Globe, PLDT, Pure Gold, or all those stocks that are defensive to the COVID-19. Okay. And I guess my last slide for today. So it is sa baba is net foreign flows for the past 12 months. So what this shows is that we already have 1.8 billion of outflows this year. Okay, so this is actually equivalent to the past 2 times na binentahan yung market ng like similar to today. Okay, like in 2018, similar amount. 2015-16, slightly bigger. Okay, and versus 2008, I think this is double the amount of selling. Okay, so it can be, I think it's good. Kasi parang malaki na yung selling eh. Maybe it's done for now. But yeah. Okay, so it's up to you now, Ernest. Okay. Just to summarize, I guess, yeah, short term, a lot is priced in already. So the market's looking forward, diba?
Okay, thank you, Jason. So our team will be discussing our experiences as traders, as well as some investing experiences as well. And from here, we will be discussing the biases that affected our execution, as well as the mistakes, which also was because of the bias. And we will also be discussing later, based on the new body of information, how to improve our trading system. So the market the past few weeks has been really volatile. So please take into heart our experiences. So first, as an investor, based on my personal account, I was actually in cash. So I had no positions in my personal. So the bias there was that when the market capitulated, we were in a call, in CTS, and Lawrence told us that it might be the best time to actually buy in terms of your personal account because this is just a once in a decade experience. However, my mindset was that I wanted to trade it, I wanted to wait for a retest of the market because I wanted it to quiet down. And of course, because of the information bias, I was reading a lot of news about COVID and I was pricing in the worst case scenario. So I wasn't able to execute in terms of my personal account during that time. And um, once the market quieted down during early April, then I started buying stocks in my personal account. In terms of my trading account, these were the biases that affected my decision. First is the directional market. Next is the fear of missing out. And next is the rigid expectations, which I'll explain to you guys later. So first, the directional market. I made money last February on the short side. So since I was a trend, since I follow the trend. I was patiently waiting for rallies. Then I wanted to short the market, given the information that I have that I was pricing in the worst case. So in the global market, my plan was to short, and in the local market, since there was no short, I thought that the market was overbought or extended. So here was the Nasdaq. So when the market rallied to the 20-day, and it gapped down, so I was prepared to buy the short. So I bought Apple since it looks like the market, and I chased the price when it gapped down. I just adjusted my size. So on intraday MACD, I added some, then I sold it everything the next day because I because my expectations were not met. Parang dapat downtick na siya. Pero since nag-uptick siya, linabas ko na lang. Same as in my dealer account in personal, in local, as you can see, the three circles, I executed different stocks there. But my mindset there was that the market was extended, it was overbought, nakakatakot, baka kung anong pwedeng mangyari. So during the first circle, I bought pure gold. So my expectation was that since it quieted down, I bought at 32, and end of day, I just squared it because I wasn't ahead. My fear was that since the market was extended, I was risking myself for a gap down, so I just squared it. Next is Ali, sorry. I bought it when it quieted down since the market didn't retest. So when it quieted down at 32, I bought it, then added at 32.95. Then when it gapped down, I just sold it at 32. So basically, it's just a square trade. And lastly, I tried MPI. When it quieted down at 56, I just bought the quiet day. And since I was ahead on close, I had the wiggle room to hold it the next day. Since again, I felt that the market was extended, I just sold everything since it was just for me that my target of 2 hours was met. So another bias was that of the fear of missing out. Since I changed my hat from being short bias to actually being long because the market didn't move based on my expectation in terms of the short, I was prepared to chase the price. So for this one, I tried AMD. It was a research favorite, a SARP. So when it gapped up, usually I wouldn't pull the trigger because I usually wait for the fade. However, given the new information coming that whatever bad news the market was receiving, it wasn't going down. So I was prepared to buy. So I bought it at break high, and just since my mindset was that I can't hold overnight for the long haul, then I just sold it. I just sold everything the next day. So I had the 1 hour reward there. So when again the market didn't go down given all the bad news that is happening. So my mindset there was that again I was looking for long alphas. So I tried PDD. So after it quieted down, I bought it break high. But since I had the mindset of just trying to scalp it, and if it doesn't move based on expectation, I'll just square it. Then I did. I just squared the position, given I don't want to risk an overnight gap down. Same as mRNA, I was prepared to actually buy the XBO given the hype of the COVID-19 vaccine. So this was one of the companies developing a vaccine, and I bought it at around 38 area. Then I sold everything near the 39 and 40 area. So the rigid expectations was there was that I was always planning to sell everything, not holding overnight, given the possibility that the market can actually gap down. And since there were a lot of issues going up each day, I can just rotate. So I was still looking for long alphas. So the adjustments that I reflected on was that it is important to have the community and mental preparation. In terms of community, it will help you address your blind spots kasi each tayo may kanya-kanyang biases, like ang dami nating nababasang bad news, lots of death, etc. But if we just listen to the price action and open our minds to the different scenarios that the market is pricing in some, it has already priced in something. Ang daming mga employment data na lumabas pero hindi nalaglag yung market. So that alone is a sign that probably the market has already discounted everything. As well as the strong issues are also, there were a lot of strong issues if you dive further. And also community gives you an accountability partner. In terms of mental preparation, as I discussed a while ago, we need to ask ourselves, is the market way oversold? Even if visually we can see that, okay, nag-rally to 20-day, possible overbought na siya, ready to short. However, we need to open our minds that there can also be a situation that bigger picture, pwede pa siyang umakyat, especially how the price reacts to news. Of course, if we're also trading the stocks that are beneficiaries of the new trends, then it can also give us additional probability stacks to adjust our rigid expectations. So probably if, for example, magbe-benefit yung company na binibili natin, for example, as what Leonard and his team shared last week, kunyari mga telehealth, mga data centers, etc., then it could help us adjust our expectations. Lastly is, of course, if we want to chase prices, given that the market of bigger picture is way oversold and we are going to buy on gaps, the most important for me is that we need to just adjust our size and participate rather than just stand idly and not do anything. So those for me are my resolutions for this. So anyway, Jensen will be discussing next his experiences as well as setting expectations.
Thank you, Ernest. Just hold on. Screen share. All right. So before I start, I just want to say that I wish you all safe health. I guess that's what's most important today. So before I go through my best and worst stage, I just want to share what my main purpose is in this company. So I was hired as a trader, and my main goal is basically to accumulate equity for the company over time. So it entails for me playing offense and defense. Okay, so offense, I do offense, especially when I know that it's a familiar scenario, given like it's a trending environment, or it's a company that I have researched on. I do aggressive on exploitable edges. Okay, and also on the other side, I play defense whenever it's a unfamiliar scenario. For example, like today, what's happening, pandemic, right? So what I do is I mostly go on defensive. I do a conservative style of trading, meaning I put my sizes smaller. I lessen my number of trades. Also, in the worst case, I can choose not to participate monetarily, meaning I can choose not to I can choose not to bet, but I also have to learn and observe, because everything that happens in the market is information, and I think it's very important that as a trader, you continue to build your arsenal. Okay. Next. All right. So in here, I just want to show you the S&P for the past 10, 12 years. Right. So if you notice, I put in here, that's my day one, 2011. And for the longest time, having gone through multiple crises like the double dip recession, the debt ceiling, the Trump tantrums, the Fed tapering, I guess it's safe to say that we're now entering a period wherein, in my case, it's an unprecedented era, basically the Great Lockdown. Okay, so I guess what the point here is that the bottom line is, as a trader, I'm a bit afraid. Okay, so because really, I mean, if you look at the news, it's just crazy out there. Like the animals are looking in the houses, wondering where all the humans have gone. People fighting over toilet papers. It's safe to say that it's really an unprecedented event. Okay, and I guess it goes to show the fragility of a globalized economy, wherein we have a health policy and economic policy, which is basically which basically has a negative correlation, meaning what's good for the health policy is devastating to our economic policy. So I guess, and right now we all know what should take precedent is the health policy. Okay. So having said that, offensive and defensive. So during this particular trade, it's the UGLD, which is the gold ETF times 3. During this time, I was on the offensive mode. So if you notice that this trade was early Feb, and during this time the market was still on an uptrend. Okay, so if you notice, this was a position trade. So it's very straightforward. The setup was a blue sky. Okay, so my expectation was, the market. There were signs of stoppish market. I guess Howard Marks, which is the president of the Oak Tree Capital, has already said that we're on the 8th innings of the market. And for those of you guys who don't know what the 8th inning is, it's basically a reference to a baseball game wherein nasa dulong-dulo ka na ng market cycle. Okay, so me and Jason were basically looking at this particular trade, and safe to say we got it pataas. So it's a basic execution wherein we probe here and then we add it here, and then we sold it as mga parabolic moves. So this was a good trade. Okay. So similar trade was the TMF. So this is the 20-year bonds of the US. Okay. So bonds, basically, it has an inverse relationship with the stock market. So if it's a risk of trade, people would go into the bonds, and therefore it will pump the price up. Okay. So the setup is fairly straightforward. It's a blue sky or a coil. Okay, so I probe here, and then when it showed some signs of strength, I added. Okay, but honestly, I didn't expect a parabolic move, because during this time, I remember the 10-year rate was about 1.4%, and I remember telling Jason, what's our upside? It's only 1.4% to zero. So, but of course, if you know like the mathematics of it, so a 1% to 0.5 is 50%, and from 0.5 to 2.25 is also 50%. So I guess yun lang, para medyo hindi ko lang masyadong na isip that moves like this could go parabolic. So, but overall, it was still a good trade. Okay, so the next one is AMD. So this was, if you notice, this is the time, sa March na eh. So fairly recent, just I guess 2 weeks ago. So during this time, as a trader, I was defensive na. I was on the defensive mode. So honestly, nakakatakot talaga mag-enter. But if you listen to the last week's presentation, and I guess by now you're all familiar with the term na, the SARP or the SARP. So SARP are those safe asset at reasonable prices. So these are the companies that you want to accumulate during like market bottoms or market retest, because they are the stronger stocks, right? So the plan was just to swing trade it. Okay, so I was looking to enter the SARPs basically on any market bottoms or reset. So in this particular trade, I put my size here, I put my trade stop here, and I put my size here. So I was looking just to swing trade it, but when after 2 days it gave me 11% to 14% return, I just scalped it. Okay, so my expectation was just to sell on surges and to buy again on support. So I drew my expectation. So this is the more bearish one. This is the base case, right? But what actually happened was like this. Okay, so it just went up, straight up. Okay. So another trade was the SE, or the, if you, more commonly known as the Shopee or the Garena. So it's basically also a SARP. Okay, so same thing, same execution rationale, basically on the retest, or or what they call double test, or a higher low. I probed, I bought, and I sold 2 days after. All right. So again, the expectation was it will just pause before it eventually go up, or it will do a double test. But like Jason said, the market expectation, maybe the market has priced in all that already, and it just shoot up. So another trade in the local market was AC. So during those times, basically it's the same concept. So the US, you have the SARP. In the Philippines, we have the index favorites. So these are your ACs, SM, SMPH, and ALIs, or BDOs. So basically the same concept. On market retest, major supports. I just bought. So in this particular trade, I bought here on the red day, just a small amount, 0.25 bar, and I added on the confirmation of the trade. So normally I would put in a 1% bar, but having said that, I am on the defensive mode. What do you call this? I minimized my size from zero point 0.1 to zero point 0.5. Okay, and if you notice, I was, in terms of selling, I was also quick. So normally I would just let it go, let it trail. But since I was on the defensive mode, any chance to sell, I just sell. So in this particular example, on the when it got up on a strong opening, I sold 1/3, and on closing, I sold 2/3. So basically, sobrang bilis. The trade was like fast. Okay, so the next one is MBT. So if you notice in the local market, there's a pattern. So the fund flows would first go to the index favorites, and then it would trickle down to the what they call this, the laggards, or the index na not so good. So in this particular trade, it's the MBT. So BDO first, and then your other banks. So same thing. If you notice, the pattern is just basically a double test, buy, a probe, and then add on confirmation, and then on major resistance or MA resistance, I sell all. Okay. And then this next example is Wilcon. So during the time that the market was rotating, Jollibee was the strongest consumer non-discretionary. So having seen the potential move of those stocks, I quickly rotated into Wilcon, which is also a consumer non-discretionary. Right? So, but size was just small, like 0.25 bar, and every chance na it surges, I was quick to sell, to take profits. Okay. Also, just to show you some of the missed trades that I made, which is of course many. During this particular scenario, this is HLT, or Hilton Worldwide, basically the hotels. Okay. So during that time, my plan was to short the most affected sectors. So, of course, with the virus going on, the most affected sectors would be the travel and the leisure. So I was looking to short this stock. So in this particular, so it was volatile. So I know in Caylum, I'm always telling you guys to short during quiet days. But in this particular time, walang quiet days. Like the quiet day was a 5% range. So in this particular time, I tried to short it. So I put my 0.5 VAR here. And then for safety measure, I put my stop on the 2-day high pa. But in this particular trade, like, pagka yung na-done yung stop ko, like 30 minutes after, na-done na yung stop ko, it just goes to show how volatile the market was at that particular time. Okay, so what happened on that Hilton group? Ito yung nangyari. Right? So this was the stock that I shorted. So it cut me out, and then the next day, nahulog na siya. Right? So a basic reflection would be like, objectively, I should have reshorted the stock the next day. But of course, tao lang, recency bias affected me. Kasi kakatalo ko lang, yes, the next day, I have a chance na magpapatalo ulit ako. If you go back to my first slide, on that particular time, as a trader, I was on the defensive mode. Like I don't want to lose that amount of money. Like my goal was to stay alive and learn, at the same time possibly make some money. But I'm not going for the jump shot. So for those of you who don't know, The Last Dance by Michael Jordan is currently out now on Netflix. Okay, so watch that after this. Right, but of course, objectively speaking, like if I really think about it, I lack the conviction to re-enter because having seen this firsthand, I didn't expect that a stock could go so fast. It could go down so deep so fast. So I thought nakaka-short pa ako after. But life doesn't give you what you want. Okay, so next is this is Microsoft. Okay, so on the face na when the market was going down, I was looking for SARPs to enter. And we identified, my team and I identified Microsoft because it has a resilient business model. It also has a minimal disruption by the crisis. Okay, but the problem was may buy stop na ako going into that trading day, but it got up 2.3%. And normally, like for example, past 3 months, when Microsoft gaps up 2.3%, you don't normally chase those kind of stocks kasi they're big companies na. So I was like, okay, fine, let it go. Okay. Tapos, what happened was, sorry. So hindi na siya nagpasakay ulit eh. I know Team Chad got this trade, so good for them. But ako, parang at that time, hinayaan ko na lang siya. Like, sayang. Right? So, basically what I'm trying to say is this particular event has affected us in some way, subconsciously or consciously. So for me, like this, like being holed up in my room in my house has made me a certified Twitter lurker. So dati, hindi ako masyado nag-social media, but now, Twitter is my source of information and entertainment. Okay, so if you notice, I don't know what you guys follow on Twitter, but for me, I follow the news, I follow people on the financial markets, and ito yung nakikita ko araw-araw. Yan. So basically, people violating quarantine. Okay. So ang point lang yan is, parang in my head, I have this negative view about the world. Kasi I see that, and then I ask myself, how about India? How about Bangladesh? How about the other developing countries that are not visible, na kulang sa news coverage, which I call the invisible majority? Paano pa sila, diba? So parang in my head, it paints a sad like a model of the world. And if you know this guy, Nouriel Roubini, this aka Dr. Doom, he's calling this particular scenario the Greater Depression. Okay, so if you guys know what happened to the Great Depression before, the stock market went down 80%. Paano pa yung Greater Depression? So anyway, but if you guys Google this guy, pabalaan na lang kasi this guy is a certified playboy. So aside from being an AKA Dr. Doom, this guy lives life like vicariously. So I don't know, pero nakakatawa lang. Just goes to show na you can never judge a book by its cover, or don't know really what's gonna happen, or diba? So but my point in all of this is that when you're searching through the social media or in Twitter, you are very prone to confirmation bias, which in my case is a super confirmation bias, because what I keep on reading are the news na negative. So it adds negativity to my model of the world. Okay, so basically what I'm saying is the negative bias affected my overall expectation and thus my execution style. Because on a normal circumstance, like I wouldn't be so quick to profit take on my SARPs or on my trades. But in this particular time, since I was negative bias, sobrang quick ko kumuha ng pera. Okay, so if I relate that to a poker style of playing, okay, so I'm like a tight passive. Okay, so I'm there, but what I need to do is shift myself a little bit higher, dun lang, just so I could be on the neutral. Malapit na ako sa neutral kasi right now I'm very bearish. And also, if you go back to the previous week's presentation by Charles, probabilistic thinking. I guess that's what we as traders need to have, because as human beings, it's not inherent in our nature to be probabilistic. We like to think in certainties because that's how we survive. That's how evolution has made us. And this one I got from Howard Marks in his what you call this, in this newsletter in January. So parang what he's saying is that success in gambling doesn't go to those who pick winners, but to those with the ability to identify superior propositions. So superior propositions is like your odds, like 10 is to 1, 20 is to 1, 10, 5 is to 2. Yeah. So your goal is to find those situations wherein the odds are generous to one side or the other, whether favorite or underdog. In other words, a mispricing. So lahat naman tayo negative, but what is the market pricing? And maybe the market is pricing in the end of the world. And sa totoo, hindi pa naman pala. So it's a good bet. All right, so moving forward, I guess what I have to do, and I guess this is for me, but maybe you could take something from it. It's like I should stay up to date with the news and data, but at the same time maintain equanimity, which is of course very hard to do. Okay, so you do that by look at the price chart objectively, and you have to ask yourself what is price in, which is one of the hardest part. Okay, of course sa Philippines we have parang may tulong tayo kasi we could read the COL reports and you could see what's their assumption, if it's realistic or not. And also during this time, it would be a good time for you to review your PowerPoint no executive course with Charles or sa normal course with Leonard and sila Michelle. No, good time to review the PowerPoints. Tapos, I guess my main takeaway is that I remember talking to Leonard. He always parang meron siya yung hindi agad-agad mentality. So, what I mean by this is like, maybe, like, in the end, sasabog talaga yung economy. Like, the Fed would fail and all that. But the point is, hindi agad-agad. Parang yun lang sinasabi niya na, maybe, in the future, but today, hindi pa. It's like, what we say to the God of Death, diba? Like, maybe, yeah, not today. Mamamatay ka rin, pero hindi ngayon. So, right now, habang hindi ka pa mamamatay, you can still make some money before you die. Okay, and I guess one of the more important or the most important part when we're going through all these changes is to find the change agents or the winners of tomorrow. Okay, so these are not only stocks na are stronger than the market, but would in turn benefit from what's happening right now. So, shortcut, refer to the previous week's presentation. I think Leonard and Michelle did a good job with picking those stocks, and also read Miss April's Inquirer article today, I think, parang wherein she lists down some of the industries na she thinks would benefit. Right. So with that, I end my presentation, and I would now turn you over to Mr. Lawrence. Thank you, guys.
All right, hi guys. All right. Okay, so I'd like to welcome over everybody. Nice to see everybody again. Basically what I'm talking about is really building and versus refining a trading system, and managing the resolutions and adjustments after you've already created those biases and set those expectations in place. When we talk about biases and expectations, the biggest concern that we really have today is whenever we are creating biases and expectations, this is basically the foundation or the center of your trading system. So everything that happens around your trading is centralized around what you've experienced, how you expect things to happen, and what is the underlying fears, what are the things you're confident about doing. These are all the things that are central in the foundation of your trading. Everything else is just built around it or on top of it, all right? So normally our biases and our expectations are built around several things that we've gotten from normally other people. The first one normally is books, things that we read, whether it's online or whether it's actual physical books. These are the things that allow us to be able to build our biases and expectations. So we move forward based off of what other people are doing. So alongside that, it's education. So when you talk about education, normally we go and look for not necessarily whether it's Caylum, whether it's your actual school, other trading sites, whatever it is. most of our biases are catered around what other people are teaching us. So whether it's something that you've learned from somebody else or whether it's something you've learned from a book, these are things that allow us to be able to build around your trading system around. Other things that create our biases are what we read online. So whether it's Facebook groups, whether it's Twitter, and I've seen already questions basing their decision making around what they're reading online, right? And the most popular one basically is learning based off of your own personal experiences. Everybody knows the one that we always talk about is "Wag mo hawakan yan, mainit. Wag mo hawakan yan, mainit." But alam mo ba talaga kung anong ibig sabihin ng mainit pag hindi mo hinawakan yan, right? So these are the things that allow us to be able to create our own biases and set our own expectations, right? But here's the thing. So hindi ako papatalo sa memes kay Jensen kanina. One of the funniest memes that we always talk about is that you become the first inventor who has reinvented the wheel. Basically, what this means is that a lot of times, sometimes we have our own set ideas based off of the things that we've experienced. And instead of learning from other people and not getting those shortcuts, we just want to be able to hack at it continuously. And the problem with this is that a lot of our traders today are stuck in this cycle. And what happens because of their biases and expectations, they end up taking a severely long time to be able to build a trading system, and without even knowing whether or not one day they'll be able to build that wheel, or even in their terms reinvent the wheel, right? And it takes a lot of time, it takes a lot of pride, it takes a lot of open-mindedness to be able to get out of the slump, right? So that's one. And the second most common version of the traders that we have today are those traders that are bouncing from trading system to trading system. They come and boss talks about this all the time, and he says that like trade na Caylum pa kayo. You end up just bouncing around and seeing what the flavor of the month is. So sometimes it's Bitcoin, sometimes it's the penny stocks, and then you keep bouncing around based off of what other people are doing instead of focusing and learning about what you should be doing and having that dedicated trading system. So these are the two common traders that we see in today's environment, and that's why I had to bring that up. Now, how do we get past that hurdle, right? So initially, what you're doing is you're basically building a trading system. This is the basic core of anything that you should be, whether it's whatever learning it is. This is the starting point. And normally, our starting point starts from learning from other people's mistakes. This is the fastest way to do it. Sometimes we're hard-headed and we just want to go at it just by ourselves without learning from other people, but it takes so long. So that's basically reinventing the wheel. The other meme that I had was basically learning from other people's mistakes. So basically, if you are attending Caylum, all of the mistakes that we've made over the past 20, in Boss's case, 40 years, we're trying to shortcut it so that you don't have to make those mistakes anymore. That's the initial, that's where we start. And then after that, from those things, you leave Caylum and you start creating your own biases based off of what you've just gotten from us. And it can be multitudes of my biases and expectations, biases that you're creating. And you feel that that's going to be the foundation of your own trading system. From that, you're finding your own resources, whether it's online, whether it's for other people, and you start gathering and trying to build that, right? Next is building your routine, and then that falls in line with trying to say, okay, I'm going to exercise early in the morning in order to get the day started. Before I go to work, I shower at this time, I eat at these times, right? But more than that, it's the routine of, okay, you're going to use this resources at this point in time. I'm going to be able to take advantage of this because of this X, Y, and Z reason. So that ends up building further the foundation of now setting your expectations, just like what Jensen was talking about earlier. Setting expectations basically means that, okay, if this happens, this is the outcome, right? And we focus on that extensively because if you're not giving yourself expectations, you're basically, it's a coin toss every single day, and you have no edge. You have no probability stacking. And then the last one in building a trading system is purposeful execution. And what this means is that every time you execute an order, you have an objective. It means that for those who have attended my recruitment course, it's my Disney story where I sold Disney because I wanted to go to sleep, and I was antok na ako. And the problem was that my reason for selling was I was falling asleep. And the next day, exactly the next day, it got bought out by, sorry, that was Marvel Entertainment. It got bought out by Disney. So it means that if I look back and see whether or not my execution was purposeful, there's no reason for me to sell that Marvel at that time. It's just that I was falling asleep. So if I didn't do that the next day, obviously it would have been acquired by Disney. So the thing here is that this is a continuous cycle over and over again. But the problem is sometimes we get stuck in this cycle. And this basically is the other meme where you're looking and now saying, okay, I'm creating my own biases, but then I'm not making money. So if I'm not making money, maybe this doesn't work. So I'll jump to the next trading system, someone else's trading system. I'll jump to today's hype is all of this Bitcoin, so I'll jump there. Tomorrow's hype is all of these penny stocks that are flying. So what ends up happening is that you have no dedicated means of being able to enhance what you're actually good at. And the problem here is if you don't get out of this cycle, you actually are not master of anything. So you're what we call jack of all trades, master of none. You bounce and get familiarity with each and everything, but you're not really good at any specific, you have no expertise in anything. So what we added at the very end was we call learning from your own mistakes. And sometimes we write it off as, okay, I don't make money usually doing this. I just don't want to do it anymore. Instead of actually digging deep and having that level of dedication to now say, hey, I want to focus on this specifically. Can I make myself better just doing this alone? And that's something a lot of the traders don't see. And that's why they're stuck in a cycle of make money, lose money, make money, lose money, make money, lose money. And it's a zero-sum game. You want to actually get to the profitable stage, you have to start now being dedicated and learning more about yourself, not necessarily from other people as much anymore, okay? Now, the objective of building a trading system is number one, we talk about removing resulting. It means if I'm right, and it says right when you make money, wrong when you lose money. Okay, it cannot be like this. That's why it's written like that. It means that when I am making money on a trade, it doesn't necessarily mean I did the right thing. And if you're losing money on trade, it doesn't necessarily mean you did the wrong thing. And this leads to the next point, which is focusing on the process. So we talk about all the time about, did I follow my plan? And if you followed your plan and the expectations that were set at the very beginning, you're doing something right. That's what you have to focus on when you're building a trading system, okay? At the end, you're segregating the best trades. So best trades doesn't mean the profitable ones. You're segregating the ones that you are followed your process and now want to focus on. This is the very key, because this is where you build mental models off of now your new biases and, more importantly, your personality. Each individual is different. I cannot say that I can mold a trader completely just from the same, we're all not cut from the same mold, right? So we are all different. We're all human beings. We're all good and weak at certain and different things. Now, what you have to understand now is you got to trim the fat. What is it that is weighing you down? You got to check. Are these biases that I'm creating weighing me down? How do I now move forward if I don't reflect and say, I need to remove these things that are holding me back from becoming the best version of myself? So this leads me to the end outcome, where it's building a trading system. The end outcome that you want is you want to focus on strengths and managing your weaknesses. As a trader, if you're not here, if you don't know what you're good at, you haven't gotten to this point yet. If you don't know what you're bad at, you have not gotten to this point yet. You're still stuck in that loop, going around and around and trying to jump from trading system to trading system, trying to reinvent the wheel. Because if you have not found these two things, you have not found your strengths and you have not identified your weaknesses, you're not here yet. Okay, you're not ready to take that next step yet because you don't actually know which direction you want to head. So I'll focus on the weaknesses first. And what I mean by weaknesses is the things that you're not good at, the things you don't enjoy doing. And you should know this by heart eventually, okay? At the end of the process, you should know what these are. Example, I have a lot of traders that don't like to analyze companies. That's fact. I have some that are terrible at doing that, right? And it doesn't mean that they have to be really good at it, but there are actual online services and resources that you can find, that you can go to, and you don't have to do the deep dives. You don't have to do Leonard's job. You don't have to do someone else's job, right? There's Seeking Alpha, there is Investors Business Daily. There are so many services online that you can tap into. The second one is the level of resourcefulness that an individual has. Jensen is the master of this, because what he does is that he's learning and taking other people's expertise and trying to be able to learn as much from it as he can at the fastest pace as he can, and turning it into executable orders. And then he can monetize on what other people are doing. And that's not a bad thing. That's his skill, right? That brings us to teams and community. This is what we're trying to do here. Caylum is a resource and allowing you guys to be able to learn as much as you can. We're doing some of the things that you don't want to do. So use us as a tool. Use Leonard as a tool. Leonard is not just CTS Global Properties, Caylum Property. He is alumni, allowing alumni to be able to use him as a resource. So take advantage of it. And then lastly is accountability. We talk about accountability all the time because us as individuals, we're weak, we're human beings, and we make mistakes. Accountability allows us to now look at someone else to look at us and say, hey, why are you doing that when you said you wouldn't do that? Right? So you have to make sure that working in teams is one of the best ways to be able to manage your weaknesses. So we focus on strengths, things that you probably enjoy doing. And when I say focus on strengths, it can be anything. It can be idea gen, which is what everybody likes, or it can be execution, which is sometimes taken for granted. Every end to end, these are all incredibly important, right? So number one is the dedication that you're going to put into the craft, because the moment that you have a strength and you say, I want to do just this, the level of dedication is going to level yourself up immediately. You have increased passion and desire. This is something that you will love to do. This is going to put your hard blood, sweat, and tears into, because you enjoy it and you'll persevere. And your confidence, what I think is incredibly important, and which a lot of traders are missing, is that if you're not doing anything right and you're trying to patch up your weaknesses, you're not really good at anything. So you don't have any confidence. You're not going to be able to make those necessary calls that you need to make from time to time, because it's not what you're good at. So you have to understand that focusing on strengths allows you to be the best version of yourself. Focusing on your weaknesses allows you to be mediocre. Okay? So which brings us to, if you've gotten to this point already as a trader, in order for you to be able to step up to that next level, it means that we have to talk about refining your trading system. So again, we start from learning from your mistakes now. The other one was learning from other people's mistakes. And that's obviously incredibly important, especially when you're building your underlying foundation. But you want to get to those next third, fourth, fifth story of your trading. You have to start learning about yourself. And that allows us to be able to, because we are adjusting our own biases. What we are now learning from our own mistakes allows us to be able to change or remove biases that we would normally weigh us down. Okay, so this is adjusting or removing, and this is from creating. And so in building a trading system, we talk about creating our biases. So we start from no bias to creating something. Refining, we're going from creating a bias to now adjusting or removing the biases that we need to make. Okay. Next is enhancing your resources. This is coming from finding your resources prior. What we talk about now is you have 100% of time, you have 100% of a resource. And if you're going to cut yourself up in multiple percentages, 30% of my time doing this, 40% of my time doing this, sometimes you can outsource some of that resource. And what you now do is now you have more and much plentier time to now dedicate your resource and doing something you're good at. Okay, so that's enhancing, what we talk about enhancing our resources. The next one is building versus following your routine. So today we want to be following a routine, not building one. Building a routine means that you start from nothing. Following your routine means that you know it inside out. That's second nature. It's something that you as an individual don't even have to think about anymore. It's like basically driving a car on autopilot. You know this inside out, and you know you do this because it's necessary for you as an individual to be able to get your job done. Next is clear expectations. The other one is setting expectations. When you start setting expectations, it's a probability. So at the very beginning, you're not sure whether or not it's going to happen. So if this happens, then this is what's the outcome. If this happens, this is the outcome. You're setting expectations. When you say clear expectations, it means that you've done this thousands of times. You know it inside out. You know that if you enter this trade, these are the probable outcomes. If you enter this trade, this is the average loss I will take if I'm wrong. This is the average gain that I will make if I'm right. You know the ins and outs of your own trading. Okay. Next is dedicated execution versus purposeful execution. Purposeful means that I'm trying to find a trading setup. So I do this so that this is the hopefully the outcome. When you say dedicated execution, this is the only thing I will trade. And if you don't trade that and you trade something else, you know you've done something wrong. Dedicated means this is the only thing I am doing. I'm not going to trade reversals and trend trading and intraday trading all at the same time. I'm going to pick, hey, I'm only going to trade momentum setups today, and that's it. Anything that's trend trading, that's it. Because what ends up happening is that you're trying to master every single trading format. I have one trader that I tell him, you know, he comes up to me and he says, hey, I'm struggling because I'm not really good at anything. I go, exactly. But the problem is here, that there's no problem here. The only thing here is that you know how to use every single tool. The thing here is that you don't pick which one you're good at. Every single tool, you want to touch every single tool, but you're not good at all of them. You know how to use it, you know how it works, but you're not really good with any single one. Find out which tool you're good at and push and dedicate yourself to that one. Okay. Lastly is review and analytics. Okay. Earlier we talked about review and learning from your mistakes, which is at the top. I add your analytics because analytics is good when you know what you're doing. Analytics is not as helpful if you haven't picked what you want to dedicate yourself to do. Analytics allows you to level up and learn about the nuances of your own trading. You know average wins, average losses, you know average hit and edge ratios. These are all very common ratios, but those don't have that added value unless you have picked and dedicated a specific trading system. It allows you to know the ins and outs. It allows you to know whether you're taking excess risk or not. All of these things are highlighted in analytics, but you can't use analytics to that degree unless you've dedicated yourself to trading a specific way. Okay. Which brings us to, so this is basically an entire cycle from end to end. Refining a trading system goes, this is the cycle that you want to keep doing. And it ends up being where you're replicating winners. You're learning the nuances of your trading. You want to replicate winners and do it over and over and over and over again. That's how you make money. At the same time, the moment that you enter a trade, you know you're wrong. Today, most traders, they enter a trade, they're still not sure whether they're right or wrong. When you're here at refining a trading system, when you enter that order, alam mo mali ka na agad. You know it by heart. And the winners, you know when you enter a trade, you know you're right immediately because you've done it thousands of times, right? So these are the two things that the primary things that you're looking at. The third one is improve analytics. And I talk about this all the time where numbers don't lie. This past year we spent for a database, CTS spent for a database, and it's one of the most powerful things. Boss said that it's the best thing we ever spent for. And the reason why is because now the traders know whether or not I said, a lot of times we'll say, no, the guy's improving, but the numbers don't show you that. No, the guy knows what he's doing. He has a process. Okay, but how come he's not making money? Right? So we chalk it down to hopefully that guy's learning, right? But that means that the analytics and the numbers that they're showing you show that you're not even at the end of building a trading system. We're not even at the beginning of refining a trading system, right? So numbers don't lie. If you are here at this point and you're refining a trading system, at the very end, You want to make sure that those numbers are the numbers that you want and those numbers that you can scale moving forward, right? So at the end, refining a trading system, the end outcome is results oriented. Building a trading system was process oriented. Building a process and finally understand what you're good at and what you're weak at. When you're at the end of refining a trading system, results matter. If you are doing this for a living and you are not making money, you have to understand, where are you in terms of that? Where am I? Am I in building a trading system or refining a trading system? Because what happens here is that you can tell yourself, I'm learning. But how long until you tell yourself, hey, I need to make money already? Because if we're just learning for the sake of learning all the time, what ends up happening is that you'll get burned out. There's no end result to what you're doing. There's no gratification. It's just learning and learning and learning and learning. And I have a lot of traders historically that were stuck in that cycle, just learning without any results. Today, this is something that we're heavily pushing for. If you look at the bottom here, it says resulting and hindsight as feedback. This is something that I want you guys to understand, where when you're building a trading system, you don't want to be resulting. If you are profitable in a trade, doesn't necessarily mean you're right. When you are refining a trading system, resulting is important, because if you are, the end outcome needs to make sure that you are making money. That's fact, right? Because you know when you're right and you know when you're wrong. You know whether we've done this so many times that at the end of the day, this has to make sure that you are making money. Hindsight is another thing that we talked about earlier, where when you're building a trading system, you can't trade off of hindsight. But when you are dedicated and you have a specific trading system that you built, hindsight is important. Because what happens is that if I miss that trade, it means I did something wrong. My trading system requires me to enter this order and I didn't enter it, something went wrong. This trade is the one I'm supposed to make. I didn't make it, or I made it and I lost money. Why? What happened? So these are the things that allow you to be able to build and now say, hey, this is what makes me do things right, and these are the things that I'm doing wrong. Okay, so a lot of the traders hopefully today have been able to pick something up. This is basically a chart just plotting each of the things that I talked about earlier. And I hope that you guys can take a gander at it. And basically that's it. So we'll open the board up to the floor up to questions. Do you have any questions?
Yep, we do actually. Thanks. Thank you, Lawrence, Jensen, Ernest, and of course, Jason. We're going to start with this question from Tess Verde. So what do you think of tech? Will it continue its rally since it formed a double bottom? We're going to call in Professor. We're going to call in Zar. Zar, are you here?
Hello, hi.
All right. Zar is going to handle this question for you, Tess. Go ahead.
All right. For Tess, Tech is Certec Holding, so it's a semiconductor company, manufactures chips for also medical equipment. So last week, it reported that it experienced a surge in demand for chips used in producing medical equipment for ventilators, CT scanners, ultrasounds, etc. So for me, it's just it's speculative. So like other stocks also last week already moved that I think traders think will benefit from the COVID outbreak. Like there's Euromed, it manufactures intravenous fluids. So I think just trade it. It's certain good volume the past few days. So, but there was good catalyst last week. So, but this is purely speculative. So.
Okay. All right.
Yeah.
Thank you, Zar. Thank you so much for helping us out here. It's a good thing that you're in the room right now. Okay, so we're going to go on to the next question, which is from Mackie. He said, or he's asking, I'm seeking guidance from your experiences. This market is very treacherous. Wall Street is continuing to point up, but Main Street clearly points down. And bears have rallies that happened before, but this is really divisive. And he's asking, I guess my concern has to do with the U.S. Fed being right half of the time. Can the market be wrong half of the time? Okay, so we'll call back Lawrence for this. Lawrence, are you there?
Yep. Yeah, that's actually a really good question. A lot of traders stuck in that have that question in mind. The one thing I would really want to highlight there, and especially from my presentation, this has been highlighted, is that it really depends on what your choice of what you really want to do is. If we are trying to catch every single trade, the likelihood of you catching both long and short is probably incredibly minuscule. So I think what needs to happen is that you have to pick a specific direction, or pick a specific whether you want to go long, whether you want to go short. Pick a direction first. That's one. Secondly, is I think this goes back to, especially when we were with my recruitment courses, we talk about looking for the needle in the haystack. And the needle in the haystack is the easiest to find when the barn is on fire. Today, the barn's on fire, obviously, right? So what ends up happening is that it's incredibly easy to be able to pick the needles in the haystack, and they are evidently stronger than everything else. So if you're thinking about whether you want to go long or short, the problem today is that if you want to go short, which almost everything is incredibly oversold today, it's very hard to find and to pick which one you really which one is weaker than the rest, because everything's in the trash. But if you want to find out who the beneficiaries are of what's happening to the COVID, which there are a significant amount of beneficiaries, highlighted especially last week in Leonard's presentation, they're very easy to find. They're very easy to spot, and they are significantly stronger than the rest. Today is the stock pickers market is the easiest way to be able to take advantage. So today's market is the easiest to be able to take advantage of that market today. One thing I want to add, Brian also said this. Pull it up.
Hi, Brian.
Here.
I don't think he is. I think he went to the grocery.
Brian wanted to add, unemployment recovered all lost jobs in 2013 after the 2008 crisis, while the market already rallied 300%. That just basically means that the market is moving way ahead than the actual economic numbers are showing, right? So keep that in mind when you're trading as well, that the market is basically priced in all the problems and the job losses in today's environment. Okay, so we can be stuck in what Jensen was saying earlier, which is the confirmation bias, and social media is showing that significantly today.
Okay. All right. Thank you. From James Reed, we all know who this guy is. So what would be the signal of hope traders must watch out in the local and U.S. market, given the hard reality that economic data points to record high unemployment, trade erosion, earnings decline, and uncertainty could drag up until a vaccine is available? So I'm going to call on our chairman to answer this for you. Boss, are you there?
Yeah.
All right.
Well, I think Jason presented it a while ago that we're picking a lot of the parabolic that came in from all the different cases. So of course, our biggest concern is we have a dark cloud. Overall, we know that the main street are gonna get hit. The thing is that prices have rallied a lot, mainly because of expectation that these things are going to be resolved. Meaning because the action of the Fed, the action of the government in locking down the economy, basically is to flatten the curve. So going forward, I think that's one of the reasons why I don't really like to short the market, because there's going forward, we think that it's more positive news coming out rather than negative news. No? But I really believe that once all of this news comes out already, for example, all the good news comes out, and then we're trying to go back to normalization, right? When the new normal, of course, it's a new normal. Then you would see prices starts drifting, meaning it's gonna go sideways, and eventually it might have a lot of retests from to the previous low. But it's not gonna be overnight that it's gonna go back down there. Let's say they call it the B rally, and then so I don't really I really don't believe that you want to be shorting the market, because those people who are shorting is mainly because they still think it's a downtrend, and then you're rallying to resistance. Yes, we're seeing resistance, but the thing is that there's a lot of new issues in the U.S. that are going new highs, right? I mean, if you have all these sectors that are going new highs, that means overall the market is still very healthy on the upside, not on the downside. But of course, it's a challenge. It's always a challenge because of the dark clouds that there's a lot of problems out on Main Street. The bigger business, I think 22 million unemployment claim already, and the challenge of whether our lockdown will be like in the Philippines. Our biggest challenge is really whether the lockdown will be extended again. Because if they're going to extend it to May 15 or even May 30, it doesn't really help the economy anymore, because it's really, that one for me would be scary in the Philippines. For the Philippines to have another lockdown for another 15 days, because they're not resolving the issue. The issue is really the slum area wherein you don't do testing there, right? I mean, there's no discipline there. I mean, most of them will be asymptomatic, and that's really the dangerous part, right? But as far as the U.S. concerned, I think we're seeing the easy money, the rally is done. I mean, that one's for sure. No? So we've reached a certain resistance, but they're channeling up and try to hit from the 50-day going to points 1.618, whatever. We don't really know. But for me, I'm waiting for markets to do a lot of profit taking and then just focus on the strong issues, which what Lawrence was saying a while ago. I would really look for those alpha issues, those new normal, those sectors that are benefiting from all this lockdown. Once they can do that, so I want to be mentally prepared to buy the pullback rather than thinking that it's the beginning of the bear market. No? But if you look at history, for example, after the Asian crisis, we rallied also 50-70% from the bottom, and then eventually it retested in 2000, 2001. So when the real economy sinks in, so I really feel it's really, markets can rally new highs, but sideways for the next 2 to 3, hopefully shorter. But I think a lot of wealth has been lost. So the velocity of the economy will definitely be slower. I mean, we have a global recession, but today I don't want to. I'm looking to go long rather than to go short, because a lot of people are basically shorting the market. But either up and down, volatility will be coming in already, mainly because of the market has rallied so much. So I hope it answers now. Any good news from the front will be used as a selling, not as a buying. For example, if they find a vaccine, then you see huge rallies after that. Then that means you're like buying on rumor, selling on news. So I really believe that going forward, any good news would be a chance to sell at a higher prices rather than anything else. I hope it answers the question.
Okay, thank you. Thanks, sir. All right, so from Rich, he's asking, how many trades, based on your experiences, would you advise traders to do so they can come up with enough results which he can reliably use to analyze his strengths and weaknesses? I'm going to throw this to Lawrence, since he's the one directly in charge of the traders.
So that's a great question. Most of the time, dedicated so basically something that you enjoy doing. These are trades that you when you're looking for specific companies, when you're looking and you're making those trades, you see some genuine benefit to it, not necessarily just making money, but genuine benefit. If you now have maybe 30 to 50 trades seeing that, and you're seeing some relative success doing it, I think it's something that you can now say, okay, I'm enjoying it, I'm putting the time and the effort, and it's reaping a little bit of rewards. I'm still making mistakes, obviously, because that's the norm. Sometimes you get stuck in volatility. Sometimes you get stopped out too early. Sometimes you overthink the trades. And what happens there is that the end outcome, normally what ends up happening is that you're basically flat or behind by a little bit. but you can now say, okay, I'm seeing if I did this right, there are going to be several trades. Let's say out of 30 or 50 trades, you've gotten 3 or 4 that mental models that say, I've done this already. And then prices are now, I made money on these trades, and these are the models that I want to use as a backbone for this trading system. And that's really, it's not really the actual trades that you're making. It's not the quantity of trades. It's not like 30 trades, but the 30 trades are not purposeful, but it's the quantity of trades that you can now have a model of. And that say, okay, this is something that I have done and I've replicated it 3, 4, 5 times. If you've done it 3, 4, or 5 times, I think it's something to say now, okay, maybe I can continue to do this, and I want to replicate this model that's of profitability more and more. Okay, so sometimes that 3, 4, 5 times takes 100 trades. Sometimes that 3, 4, 5 times takes 20 trades. So it's more about being able to make a specific model and doing that and say, I've done this several times before you can say this becomes something that I want to dedicate to, and this is something I'm enjoying doing, and this becomes my strength.
Okay, all right. So I think that's pretty much it. I'm going to pass it on to our fearless leader right now. So Edmund.
Thank you guys once again for these presentations. I think over the last 2 weeks, we've been trying to talk more about process. And while today was slightly different, we've been trying to make a little bit more explanation on the execution. And the reason why, it's because we've noticed that some of our traders, especially, have been going through difficulty during these periods. And sometimes what we always tell our traders is that a lot of our biases can usually interfere with how our trading and systems will appear to be. And I always tell people that there's always 2 questions about being right, or do you want to be right, or do you want to make money? And the answer should be obvious, meaning the answer should be is that you want to be able to make money, right? And being right or being can be very expensive. And so every single individual needs to have that mental preparation and that flexibility to be able to change and to understand where your difficulties are coming from. And so I hope Ernest, Jensen, and Lawrence were able to share their experience and hopefully give you guys more insight as to what you should be doing to your own trading as well. I mean, I hope all of you guys are doing well and making money and trying to understand your trades as much as you can. So hopefully we're here to provide you guys support. We're very excited for what's to come. Hopefully more support will come. If you guys have any feedback, comments, or suggestions, feel free to message me or Eleanor or Nina and Mayu so that we can do our adjustments accordingly. Okay, so thank you, everybody.
Okay, thank you, team. We'll see you guys again next week. Thank you. Thank you guys so much.
Thank you.
Stay safe.
Bye-bye.